Yo, yo. Yo, yo. It's been a while. It's been a little while. GameStop stock hasn't been doing that well, but I think the whole market's been down, which is pretty funny because we did talk about that like a week or two ago. How the market's been super flat and probably is going to sell off. And now it's happening. So, it's kind of funny. It's kind of funny. I don't think there's really been any news or anything on the GameStop front, though. That's why I haven't streamed. Because there's nothing to talk about. What, are we going to talk about the market selling off that we aren't shorting? I don't know. What the heck? A fake coin? What's up, Kenny? Save the market? I can't. I can only predict where it's going to go. That's all I can do. But having all my money in GameStop doesn't really benefit me, knowing as much as I know about the stock market. Doesn't really benefit me. So I just get to sit back and do nothing. Yeah, I don't think there's literally anything to talk about on the GameStop front. Like, there's literally nothing. I don't think there's been, like, any news or anything. It's been radio silence. What's up, Moose? How you doing, Moose? Yeah, I don't think anything's happened at all. I don't even think there's anything. I mean, that's why we're doing an Intel stream, because there's nothing to talk about on the GameStop front. So we gotta do an Intel stream, you know? We gotta do the Intel stream. So, wow, Intel's under $100 now. Interesting. I've heard a lot of like tech stocks that were up a lot or down a lot. I haven't really been paying attention, but it's just what I've been hearing. A lot of things getting wrecked. What's up, Jay Shwu? Jay Shuwei. When's the earnings call? I don't know actually. When do you think Ryan may be waiting to trigger the next batch of interviews or releasing anything? I have no clue. I don't even care. if I'm just being honest. Ryan Cohen doing an interview doesn't do anything for me. It's cool to watch, I guess, but it's kind of irrelevant, I think. Google's down 6%. Holy. Nice. I guess that's something we can do, is look at the overall market. I think a lot of things are down. I'm sure Apple's still at all-time highs. Apple's like the only like it's down a little bit, but I'd be like super bearish on the market right now if it wasn't just for Apple, which may be dumb to say, but if the market was truly bearish, Apple wouldn't be hitting all-time highs. Is Nvidia still up? I don't know, Nvidia's up, but not at all-time highs like Apple. Let's see. Let's have a look-see at what the overall market looks like. Is today's Thursday too? The week's basically over. I never understand how you guys take GameStop serious. I feel like you're just from the era of when it exploded and you don't really have much knowledge on investing, or you wouldn't invest in it. Well, my investment's based on the next 10, 20, 30 years. You're making your opinion based off of when the company was complete dog shit, and your opinion's based off of a very short time period, so Come back in 10, 20 years and we'll have the same conversation. We'll see who's up more, cuz my business actually makes money that I invest in, and the stock seems very undervalued compared to the business, unlike every other stock on the market. So you can have that opinion, but it's a dumb opinion because my investment's based on decades, not a year or two. So come back in a couple decades and saying I don't know anything about investing, I'm pretty sure I just predicted the stock market crash. Like, I don't know if it's going to crash, but I mean, anyone was here, we talked about this. I know way more about investing than you. And you're talking about semiconductors? Yeah, okay, bud. You're talking about semiconductors because they've only gone straight up the past 2 years. And you're saying I don't know how to invest. Okay, guy. Anyone can buy a chart that's just going straight up and make money. It takes no skill. To sit on an investment for years that doesn't move, that's a real investment, bud. You don't know shit about investing. You're talking about stocks that have only gone up the past 2 years. I'm talking about decades. All right. I've made a few 100,000 from semiconductors. Well, good for you. You'll lose a few 100,000 soon. I also don't believe you, but if you truly made a few $100,000, you should go do something with your life instead of worrying about what I'm doing. So I really don't believe you, because if I made a few $100,000, I'd be like doing something with my life, not going on random YouTube live streams and talking shit about something you don't understand. So, good luck. Good luck being a piece of shit the rest of your life with your few $100,000. Maybe you should try worrying about yourself and do something good for the world instead of worrying about what some random YouTuber's doing on YouTube. And I would never learn investing from someone who thinks that because they made money on stocks going straight up that they think they're smart. I would never learn from someone like that. It's that you're in the same position as so many people in 2020, and everyone I know who made money in 2020 lost all their money. So you'll be in that same boat here in a few years, I'm sure. If you're worried about what I'm doing, you should worry about yourself and try to hold on to your money that you supposedly made. Why is Meta down today? The whole market's down. Probably every single stock's down. I'm sure there's stocks that are up, but all the big names are down. This guy's over here worried about what I'm investing in, and he's down like 10-20% today. It's pretty interesting how that works, right? It's funny how someone who's down a lot of money today wants to come and tell me how to invest. That makes a lot of sense. Makes a lot of sense. That's definitely someone you should listen to. Someone who's worried about price action that's happened the past 2 years. This guy knows what he's talking about. Trying to teach people how to better investors is what I'm doing. You're not a good investor. You made money on the easiest bull run I've ever seen in my life besides 2020. You're not an investor. You're a trader. So you don't know shit about investing. You made money on a stock chart that's going straight up and you think you're intelligent. I've seen a million people do that. It doesn't make you smart. You just YOLO'd and got lucky. Anyone can do that. Anyone can YOLO and get lucky. It's very simple to do. It just doesn't work out every time because you're just gambling. And you got lucky. So congratulations. But it doesn't make you a good investor. Not the biggest flex we've seen come through here. Seen randos at least say millions. I know everyone who comes in this stream's made hundreds of thousands of dollars. Every single person. They've all made hundreds of thousands of dollars, but they're worried about what I'm doing for some reason. Doesn't really make sense. I wouldn't, like I said, if I made hundreds of thousands of dollars, I wouldn't be worrying about what other people are doing. I'd be like on a beach somewhere or like doing something important with my life instead of typing in a YouTube live stream. Like, I mean, it's fine to type in a YouTube live stream. Like, of course, I appreciate the engagement, but I wouldn't be acting like I'm intelligent because I made money on the easiest bull run ever in history, probably. Like, congratulations. Congratulations. I've made a lot of money on GameStop, but it just hasn't moved in a long time, so it is what it is. That's real investing. You know, real investing isn't a stock chart going straight up for 2 years. That's not real investing. FOMOing in on a stock chart going straight up isn't investing. I actually got in before they went straight up, and that's how I made the money. Anyways, you're not wasting my time with you enjoy your GameStop. I will enjoy my GameStop. I enjoy it frequently. It's a fun time. GameStop's pretty chill. GameStop is pretty chill. I mean, I'm not down 10-20% today, so I'm good. I think, how much am I down today? I don't even know. Where'd the chart go? It's gone. Oh, I know why. 1%, 1.5%. Nice. See, everyone's always only focused on things that go straight up. And then when they come down, they don't have anything to say. What is going on with this? What is happening here? This thing is messed up right now. Alright, whatever. I want to look at the market one more time before I close this. Apparently, let's see. Good lord. I have a feeling, I don't know. I already talked about it last week. I already said that the market being flat like that for how long it was, a month or two, not good. So, is what it is, but I still think the market's bullish, but who knows? Who cares, honestly? Who really cares? Alright, I need to get rid of this. This thing is glitched out. What happened to my chat? Oh, there it is. There's the chat. Market closes here in a second. How was your guys' weekend? I know I haven't streamed all week because there's been literally nothing to talk about, so I hope you guys had a good weekend. I've just literally done nothing. Just played RuneScape, honestly. That's all I've done is play RuneScape. It's been very boring. I've been very bored. Any news on Intel? I don't really know what you're asking. It's not really a question. You have earnings here in a little bit. Trying to teach people for free. He made hundreds of thousands of dollars on semiconductors, so you should probably listen to him. You know? Investing in things that go straight up. Like, it works. It works. But until it doesn't. It works until it doesn't. It's like I literally feel like I traveled back in time. Like, I feel like it's 2020 all over again. It's kind of weird, right? Like, I obviously I don't really think GameStop's gonna do what it did in 2020, but it feels exactly like 2020. Like, people coming in the stream, they act like they're smart because they made money on stocks going straight up. Like, it's we're literally living in 2020 again, except rates are really high. You don't have 0% rates, basically. That's the only difference. It's like all the people in real estate are getting fucked, but all the degenerate FOMO traders are winning. And usually, I mean, from my experience, it doesn't last very long, but I feel like I'm in 2020 again. It's very weird. Very weird. Talk about the next buy. Nah, bro, he already made the money. He already made the money. He's a professional. Professional trader. Well, Intel's already going up after hours here. I doubt their earnings report's out already, but maybe. Usually they don't release them like right as the bell rings. Bullish on Intel? I don't know. Is Intel bullish? I don't know. Maybe. Could be. It also couldn't be. I mean, judging by the past month of price action, it's not bullish, but if you're looking at the past year, it's pretty damn bullish. So it depends what time frame you're looking on, I guess. Just ban him. Nah, it's funny. It's funny. This, like I said, I'm living in 2020 again. This is nostalgic for me. I love when everyone thinks they're smart because they're making money on charts going straight up. It's a good time. It's a good time. Is this the report? July 23rd, 2026? It's already up. Okay, damn, they released that quick. Usually they don't release them that quick. Very interesting. How's everyone doing? What is your positions on Intel? What is your hopes for the future? Did you guys invest in Intel recently because it was going straight up, or have you been holding for a long time? Because most of the people have only been investing the past year as the stock goes straight up. But if you've been investing in Intel for a long time, congratulations. Congratulations. What's up, Pele? Deja Vu. What's up, Deja Vu? Nicholas. What's up? Yesterday Gaming. How you doing, Yesterday Gaming? Hope you had a good weekend. I know the week's basically almost over, but I haven't seen you guys since last week. Damn, Intel's ripping after hours, up 8%. Well, 7%. I'm in Intel since 40. Nice. Bought at 60. Bought AMD back in high school when it's $3 per share. Didn't buy Intel though. I mean, AMD was a better investment, so who cares about Intel at that point? AMD's crushed. Intel's, I mean, besides dividends, Intel's not that great. I don't think. All right. Let's see. Make sure you guys hit that like button. I don't get why we only have 4 likes. That doesn't make any sense, but whatever. Sold at 62-ish. All right, so Intel second quarter revenue was $16.1 billion, up 25% year over year. Second quarter earnings loss per EPS attributable to Intel was 2.16. Oh, negative 2.16. Non-GAAP EPS attributable to Intel was 0.42. Forecasting third quarter 2026 revenue of $15.8 billion to $16.8 billion. Expecting third quarter EPS attributable to Intel of 31 cents. And non-GAAP EPS attributable to Intel of 0.38. Alright, so they lost money. Or at least they're losing money per share. That's pretty interesting. I think it's I mean, they're probably just spending a lot, but pretty interesting. It's pretty interesting how all these stocks are just the businesses behind, like all these stocks that are going straight up, a lot of the businesses probably aren't as good as what the market seems to think. But, you know, we'll see in 10, 20 years, I guess. Can't really judge a market for short-term irrational behavior, I guess. I don't know. Let's see. Intel Corporation today reported second quarter 2026 financial results. AI is driving unprecedented demand for compute, and as we continue to execute, Intel is well positioned to capture sustainable growth across our CPU franchise, ASICs, advanced packaging, and vast wafer foundry network. Our Q2 results represent our strongest revenue in more than 15 years, enabled by greater speed, accountability, and customer focus. Wow. Doesn't that just sound fantastic? Just investing in AI? Man. So sick, dude. AI is just so cool, man. Like, I don't know how I can be a GameStop investor with all this AI around. Like, AI is just the future, and it's just such a good investment. Like, what am I doing? Why am I investing in GameStop shares? I'm an idiot. I should be investing in AI. We delivered a strong second quarter, exceeding our financial guidance on robust demand and improved execution, including volume upside driven by higher factory yields and improved cycle time. AI-driven compute continues to strengthen and to support expected growth this year. And next, across products and foundry, we are meaningfully increasing our investments in equipment, clean room space, and substrates. Wow, substrates? Amazing. In the second quarter, the company generated $7 billion in cash from operations. Well, that's actually pretty solid. Congrats, Intel. That's actually pretty good. Comparability of our consolidated condensed financial statements year over year was impacted by the deconsolidation of Altera. Altera, a business offering programmable semiconductors, primarily FPGAs and related products for a broad range of applications, as previously a wholly owned subsidiary, was deconsolidated from our consolidated financial statement effective September 12, 2025, following the closing of the sale of 51% of Altera's issued and outstanding common stock. Altera's financial results of operations were included in our consolidated financial statement. Okay. Product momentum. Intel advanced its agentic AI infrastructure strategy with a new rack-scale AI infrastructure and disaggregated inference solutions built on Intel Xeon processors. Intel, Samba Nova, and Foxconn demonstrated production-ready rack-scale infrastructure for inference and agentic workloads, while Vector Core Compute unveiled a disaggregated agentic cloud combining Intel's Xeon processors, Samba Nova's RDUs, and NVIDIA's Blackwell GPUs. Wow. Let's see. Intel launched next generation data center CPU Xeon 6 Plus, Intel's first server class product on Intel 18A for sustained performance under real world power constraints. Intel expanded its physical AI and robotics momentum with more than 130 customers adopting or testing Intel Core Ultra Series 3 and Intel Core Series 3 processors for edge, AI, and robotics applications. Intel also introduced OpenVINO Physical AI, an open source framework designed to help developers deploy robotics models across vision, language, reasoning, and motion control workloads. Intel introduced Intel Arc G series processors, a new family of products designed for next generation handheld gaming systems. Intel announced strategic collaborations with Foxconn, Siemens, Hitachi. Hitachi? Isn't that the... Aren't those sex toys? I swear Hitachi's a sex toy, isn't it? Chat. What the fuck do you need an Intel Hitachi for? Is Hitachi a sex toy? I swear to God, bro. I swear to God, bro. I swear that's like the wand. What do you need an AI fucking Hitachi, bro? That's crazy. Echo Neurotechnologies and Greenstone Biosciences to co-develop industry-specific AI and compute solutions powered by Intel processors and purpose-built silicon. Intel introduced Ethernet E835 portfolio, scaling from 10 GBE to 200 GBE across cloud, AI enterprise, edge, and telco infrastructure, demonstrating its networking leadership. Just seen you went live. Can't stay, but have a good day, y'all. Appreciate you stopping in, Break Nation. You have a good day as well. Hitachi's an electronics company? Oh. I guess I'm just a pervert. Intel Foundry advanced the Intel 18A family as Intel 18AP entered risk production, meeting the timeline shared with customers and partners last year while extending the platform with enhanced performance power and thermal resistance. Intel Foundry has entered high-volume manufacturing for subset of Intel Core Ultra Series 3 processors, codenamed Panther Lake, using ASML's EXE high NAEV technology. Intel expanded its purpose-built silicon business beyond networking and IPUs through a strategic collaboration with Fortinet to develop Fortinet Security Processor 6 using Intel's advanced design, packaging, and manufacturing capabilities. Intel announced a €5 billion investment to expand manufacturing capacity and increase production of Intel Xeon 6 and next-generation Intel Xeon processors built on Intel 3. Intel expanded Bowers campus capacity, increasing Intel mask operations capability to support current and future leading-edge process technology development and manufacturing. Patented AI-powered suction. Damn right, bro. You gotta get that proper suck. The AI will remember your favorite suck. So that's some good technology. Why get a real girlfriend when you can get an AI-powered Hitachi? Or vice versa. Why get a boyfriend when you can get an AI-powered Hitachi? Intel strengthened its leadership team with appointments of Alex Katosian to lead the Client Computing and Physical AI group, Pushkar Ranade as Chief Technology Officer, Seok-hee Lee to lead Advanced Packaging, and Aparna Bawa to lead Intel's Global Legal, Ethics, Compliance, People, and Cultural Organization. These appointments further align Intel's product, technology, manufacturing, and culture organizations with the company's innovation and execution priorities. Intel and Google Cloud expanded their multi-year strategic collaboration to scale AI capabilities across Intel's workforce and strengthen existing workflows as part of Intel's AI-powered transformation. Anything else? I think the rest of it... What is up with this? Okay. The numbers. I don't think they have any more things to read. I want to just see how much net income they pulled. They lost 15 billion. What? They purchased a bunch of short-term investments. Pretty interesting. Pretty interesting. What is Intel's market cap? I need to look at that for a second. Isn't it like a lot? 500 billion? Damn, that was so undervalued like a few months ago. Crazy. Whoops. We don't want to look at GameStop. That's terrible. It's not doing. I mean, it's doing fine. It's doing what it does. It's doing whatever GameStop does. All right. Let's see. What's this chat? I like how you say Exion instead of Xeon. There's a reason all robots look human, even though it's not an efficient design. They're waiting to pivot into adult entertainment. Good point. Good point. That's going to be the biggest driver of anything. You know? When you can get a blowy that's better from a robot than an actual person, I mean, it's pretty much over. Robots are number one at that point. There's just no... You're just never going to win. You're just never going to win. Everyone's going to be fucking robots. What am I looking up again? Oh, yeah, Intel. Oh, yeah, they don't release 10K or 10Qs that quick. They never release them that quick. What's up, Rosh? Rosh, last time you were in the stream, I was in a really bad mood, and my bad, bro. I think I was kind of rude, so my bad about that. My bad about that. I just didn't want to talk about GameStop, which is what it is. GameStop's kind of an annoying topic most of the time. The stock market in general is kind of an annoying topic. But I appreciate you stopping back in, my friend. Hope you're doing good. And I'm sorry I was in a bad mood. Asians are number one. Just wait till the earnings call starts and all the Trumpers come back. Unless I bet all the Trumpers have sold at this point. You remember that first Intel stream we did and it was like nothing but Trumpers? I think all the Trumpers sold, bro. I think all the Trumpers took their profits. Didn't take any offense. I'm pissed at times too. Yeah, I just I shouldn't even have started the stream that day. I have this issue is even when I don't want to stream, I still start up the stream, and I've been trying to get better at that, even though, you know, I want to stream every day. It's just, if I'm in a bad mood, there's no point in even starting the stream, because it just doesn't go well. Yeah, the whole market's down, though. You know, or hasn't moved in quite a while. Like, it's not really... I don't know. I think it's just different for me because I'm like a actual stock trader, and I know how easy it is to make money in this market. I mean, it's also really difficult to make money in the market, depending on how you approach it, but I just get annoyed, I guess, because I know I can do more. But it's like, at the same time, you know, the 10, 20, 30 year outlook of just holding a stock forever is way more interesting than trading and flipping short term. So it's just getting used to, you know. I've been a day trader, short-term trader for majority of my stock market career, so holding something forever is pretty interesting, to say the least. And, you know, it still hasn't really paid off yet, so it's like, it's still kind of up in the air. I don't know if that makes sense, but we'll see what happens. I think it's really easy to just do a short-term bet, is all I'm trying to say. Like, it doesn't take any skill or any, like, willpower or anything. Like, I think making a short-term bet is so easy, and that's why people do it, you know? It's easy, it gives you that quick dopamine rush. When you lose, it sucks, but you're just on to the next trade, and then you just forget about it. It's like when you're just, like, stuck with one thing. It's not easy. It's not easy. I don't think a lot of people give real GameStop investors credit for their willpower. Because most people have abandoned this investment for a long time, you know? Everyone moved on to shit like Intel. You know, things that are going straight up. Which I don't blame them, you know? I don't blame them. If you're a short-term trader, you know, that's definitely, you know, probably the move, but yeah, we'll see. We'll see what 5, 10, 20 years looks like, I guess, right? Oh, I should probably get ready for the Intel earnings call, huh? Holding long gets fun once some of your stocks are sitting on hundreds of % gains. Oh yeah, I'm sure. I have all my money in one stock though, so it's a little different. It's a little different. But I definitely get what you're saying, because you know, being in an investment you never have to sell is a super positive thing, because paying taxes is dumb as fuck. Where's I'm gonna try to find the investor relation website. Why can't I find it? Investor meetings? No. Press releases? No. Why can't I find it? It's not stockholder meeting. Presentations. Wait. Yep, there we are. I found it. Okay. Wait, that's not... This is the slideshow for the earnings call, but not what I'm looking for. I have a video one? It's gotta be this. I think it's this. I found it. I found it. Don't you worry. Don't you worry. Why is this being so dumb? Okay. Let me get in this earnings call. Oh, we're in there. You know when that music starts playing. Welcome to Intel's earnings call. I don't know if I can keep that music playing. Welcome to Intel's earnings call. We hope you're having a wonderful day. Today we're going to be talking about how Intel's losing so much money but making so much at the same time, because we're investing all of our money into AI. I hope you're excited for the ride. I should be an Intel spokesperson. I feel like that was pretty good. I have to sell covered calls to make holding interesting. I don't like selling. I don't like selling options. If I wanted to sell covered calls, I would just day trade. Like selling options is kind of whack in my opinion. But if you enjoy it, you do your thing, man. I think the point of holding is to just not pay taxes personally. Intel's still $20 off all-time highs, kind of sad. Now, wasn't it all-time high at 150? I mean, so it's quite a bit off. Oh, I didn't hit 150, only 140, 139, 138, something like that. I mean, percentage-wise, that's a decent sell-off, but is what it is. Intel was undervalued, most likely. I wouldn't want to invest in it, but it's done well. It has done well. Sounds like the K-Rose ads on GTA Radio. K-Rose. I haven't played Grand Theft Auto in so long. I don't even think I'm going to play GTA 6 when it comes out. Probably will. I don't know when I'll play that game. Maybe when online comes out I'll consider it, but I don't know. I thought that was a real ad playing. I came to my phone to press skip. That's awesome. When does the call start? I think in like 30 minutes. Not exactly sure. When does it say? It says 5 p.m. EDT. So yeah, I think 30 minutes. I mean, it's up a lot after that earnings. Up quite a bit. When Nana has her cocoa and sits by the fire. What? What? That's hilarious. That's hilarious. I don't know what we're gonna do in the meantime. Any news on Reddit? Probably not. Nope. Nothing. How about CNBC? Damn, Nasdaq's down 2% today. We got Intel. Okay. Oils is $100 again. Sheesh. Amazon, Microsoft pivot cloud gaming strategies to target different players. Alphabet loses hundreds of billions in value in post-earnings stock plunge. I forgot Tesla and Google had earnings yesterday, or I would have streamed yesterday. I didn't realize it till the day was already like over. I was like, oh yeah, there's earnings I can stream about. I don't have to just talk about GameStop, which is good. I wish there was more to talk about on the GameStop front, but it's just been very quiet. You know the stock chart motocross game? You can ride on charts and choose the time frame. No, I've never seen that. That's kind of funny. People fighting to own their games right now. Let's see. Chick-fil-A warns customers to change passwords after hackers access loyalty accounts. That's wild. That's pretty wild. What else has been going on in the market? Is there anything? I swear, man. Ever since I became a GameStop investor, the stock market is just like, I don't even know what's happening most of the time. I look at it for like 10, 20 minutes, and that's about it. It's kind of nice in a lot of ways. Microslop. It's on Reddit. Some guy made a browser app in case you're bored on the toilet. I don't scroll on the toilet or use my phone. But that sounds cool. I've been playing a ton of RuneScape. I don't know why, but I have been. Apple may lock finance phones if you fall behind on payments in iOS 27. That's crazy. Passengers force plane to turn around after mass brawl breaks out. That's that might be enough news for today. That might be enough news for today. I mean, we'll see if there's any more, but I don't like reading the news. It's always so bad. Google hit with over 1 billion in EU fines over search and Play Store practices. Yeah. Cool Kicks co-owner charged in 2 million Nike theft after 5-year investigation. I feel like I remember Cool Kicks. I think I remember when that happened. Yep, nothing on the news front. Nothing to talk about. That's lame. That's lame. I wish sometimes I wish I could do 7-8 hour streams like I used to, but unfortunately I don't have the will to do it. Mostly because there's nothing I care to talk about, but is what it is. Is what it is. Anything else? How's crypto doing? 65, still kind of up, I guess. It's doing better than it's been doing, but it's still bearish. Still kind of bearish. And bullish the past month. Bearish the past year. Bullish overall. I wouldn't buy it, but it is getting it seems like it's stabilizing. It's just if it's only stabilizing because people are FOMOing in since it's down 50%, that's not really a good thing. Nothing there. I don't think there's anything on like filing. Oh yeah, there was an interview with Ryan Cohen, but there's really nothing in it. I think the only thing he talked about in it was that the deal might not get done this year or whatever. It might take until the next annual meeting for eBay. So that kind of is whatever. Means another year of nothing, basically. How I perceive it. See the article about Japan regulating the Pokemon market to combat money laundering. I think I saw the headline of it, but I didn't read it. I want to say I saw that headline. Pokemon's been not doing so hot, so I've heard. The hype's finally gone, at least for some products. I don't know if it's for all of them, but money's rotating to Magic, it seems like. The Pokemon's kind of cooked. Especially, I mean, it's pretty interesting that Pokemon's not just going straight up anymore. It's gonna change the whole market. It's gonna change the whole market. If you can't just go to a store anymore and, make money, nobody's gonna buy Pokemon. And all these people who are just sitting on Pokemon for the past, 2 years, they've just been buying, scalping, botting, just hoarding product. It's not gonna be good. It's not gonna be good. I mean, it's gonna be good for people who actually want the product and want the cards and want to open them and stuff. But it's gonna be interesting to see what happens with Pokemon in the next 6 months to a year. It'll actually be really good if you can't just buy Pokemon and make money the second you buy it. It'll actually be really good. But it also could be bad for scalpers, which is good. Because fuck scalpers. They deserve to get wrecked. They deserve to get wrecked. At least Pokemon scalpers. And the same thing will probably happen with Magic as well. If people are really rotating into Magic, everyone's just gonna sell their Pokemon at a loss or slight profit, rotate into Magic, get wrecked again. Such is life. Such is life. It's all the people who just chase charts going straight up, basically. Except it's Pokemon instead of a chart or a stock chart or a crypto chart. Palworld's the new Pokemon? Palworld's not even close to being on Pokemon's level. How many people play Palworld? Like, does even 100,000 people play Palworld? You're talking about multiple millions of people who love Pokemon, and you're comparing it to a game that it actually has 500,000 people playing. That's actually really impressive. That's actually really impressive. What happened? Why did this blow up the past couple months? What the hell? What the fuck? The player count 10x'd. What happened? Why did Palworld's player count 10x? What the hell? That's crazy. It's actually insane. It's a massive spike in players. What's up, Steep Shallow? Welcome to the dead chat. What happened to Palworld though? Why did Palworld's player count spike? Palworld's player count spiked dramatically after the release of full 1.0 update. The update delivered a massive wave of new content, mechanics, and features. Both reinvigorated lapsed players and attracted newcomers. 72 new pals, mechanics overhaul, story expansion, quality of life, And the price of the game was on sale as well. Dude, that's still an insane spike in players. Like, that's actually wild. That's a huge spike. SMH rides on Intel. Sure. I guess. I know what SMH is. I wouldn't invest in SMH if I was bullish on Intel though. I would invest in Intel. You should be bullish on chips in general, not just a couple of the chip companies. Even though they all move together. I don't know. I don't find investing in those ETFs interesting. Think you're better off just doing the NASDAQ at that point. But I also don't know how much SMH is up compared to the NASDAQ. That'd be an interesting thing to look at, I guess, since we're trying to kill time. SMH is up 40% in the past 6 months. That's pretty good. 60% year to date, 100% past year, 300% the past 5 years. I don't think the NASDAQ's up that much. I don't think even close. Yeah, 10%, 12%. Yeah, 87% on 5 years. That's pretty interesting. I don't know, how much would you have made if you just bought an individual name though? Like, what if you bought AMD? You'd be up 100% the past 6 months, 150 year to date. Yeah, quite a bit more. SMH still did well, all things considered. I didn't think it was up that much. I don't really pay attention to that much. Look at it for like 10 seconds to get an idea of what the semiconductor market's doing, and then stop caring after like 10 seconds. That's pretty much what I use SMH for. AI memory shortage is increasing the price of cars. GM warns of vast cost increases. BYD hikes driver assistant prices 20%. There's an average of 278 gigabytes of memory in a modern car. That's kind of funny, actually, because the car market is such dog shit right now. Now the prices are good. That's actually really interesting. Even how dog shit the car market is, they're still the prices are still jacked up just because of AI. Why can't real estate get that kind of? Why can't I have AI in my real estate? When can I have an AI powered home? I need my real estate to go up. Can someone do something? Give me an AI powered home so my real estate will go up. Because real estate's complete dog shit right now. We need something to save it. I think AI is the solution. I need like an AI water heater or something. That's just it, man. AI is just the solution to all our problems, man. It's just is what it is. The car market shit. AI. Oh man, that's actually kind of ridiculous to think about. Kind of ridiculous. AI brokers. Yeah, I want my AI real estate agent. Please. I'm sick of paying 3% fees or however much it is. I think it's 3%. I need an AI one that works for free. Could work for car salesman. An AI car salesman. I'd actually kind of prefer that. Car salesmen suck. never never have I had a good experience with a car salesman. When have you ever had a good experience with a car salesman? Honestly, they're always trying to do something shady. Just blame AI for ripping people off. Shit's ridiculous. AI is a joke. It's gonna be interesting to see what happens. I mean, you're already kind of seeing it with a lot of smaller companies who are investing in AI, just getting wrecked because their investment isn't paying off. Like, what's gonna happen in like 5-10 years if this investment doesn't pay off for the multi-billion-dollar companies? Like, that'll be super interesting to see. I don't think that I don't know, man. I'm super interested to see what the next 5-10 years look like in the AI world. Like it'd be wild if everyone lost confidence in it. All that money just blown. All the stock appreciation just gone. It'd be a wild thing to see. Pivot to Bitcoin mining from data centers. Bitcoin mining won't be relevant soon. You won't even be able to mine it anymore soon. Once once it's all locked up, or once the cap hits, which I forget what year the cap hits, but I feel like it's in the next few decades. Bitcoin mining won't even be relevant. That's why you're seeing all the Bitcoin miners turn into data centers like Riot and shit, because they know Bitcoin's on a clock, at least as far as mining it goes. Investing in it, I mean, I've never liked Bitcoin as an investment personally, so I'm not really the person to be talking about that with if you want a positive perspective. I hate crypto. I think crypto's the dumbest thing ever. I thought they processed transactions to earn too. Like brokerages, like Coinbase and stuff, but the miners, nah. I don't think they get money for transactions. I think they just hoard the Bitcoin they mine and sell it sometimes. But Coinbase and stuff, they make money off the transactions. Robinhood, things like that. I mean, if you're like GameStop, you sell the covered calls on the Bitcoin, which is a pretty interesting strategy. Got about 10 minutes till this earnings call starts. Catch you next stream. All right, Moose. I don't know if I'll stream tomorrow. We'll see if there's anything. But if I don't see you tomorrow, I'll see you next week for sure. Have a good weekend, Moose. Much love, bro. What time's the earnings call? Starts in about 10 minutes, I believe. Let's see. Is there anything else to talk about? I'm trying to think. Really hasn't been like news or anything. It's been really quiet. I think there's a lot of stocks that are like down from their highs quite a bit. But like I said earlier, I just haven't been paying attention, so I don't really know. But other than that, hasn't been much to talk about. Magic the Gathering's really interesting. A lot of the boxes on Magic the Gathering are appreciating pretty rapidly lately. But yeah, just it's been quiet. It's been quiet. I think GameStop exercised those options at a pretty proper time. Kind of interesting. I don't think it like benefits them in any way because they don't get to make any money from the volatility from the options and stuff. But pretty interesting timing on the exercise of those options, pretty much at all-time highs. Quiet chat, quiet chat. Well, if you guys have anything to talk about, put it in the chat. If not, the Intel call starts relatively soon. So we'll just be chilling until then. Not much to talk about. I haven't been paying attention to the economic calendar either. I think mortgages hit new highs or close. Oh, not quite. You're hitting the retrace from the breakout of 6.62. So that's pretty interesting. That's pretty interesting, but yeah. Short Micron? No, I'm good. I'll just continue to buy GameStop shares. That's not really a conversation, though. Anyone can buy or sell a stock at any second of any day, basically, so it's not really a good conversation to bring. See the institutional ownership of GME at 50%? No. I don't know. I haven't seen that. I don't even know where you would find that. I've seen that on Reddit a couple times, but personally I haven't been able to find that actual information by myself, so no, isn't really relevant to me. And obviously it doesn't matter too much. Where do you find that information anyway? Like I said, I've only seen people post it, so I haven't seen the actual website that has that information. Fidelity shows you. I'll check it in a second. I'll check that. What would I type? Fidelity institutional ownership, I guess. That's not right. Click view all. Where do you see that? I don't know where to go. Search GME. Oh, I see. I don't have a Fidelity account, so it probably won't let me view this. Or I think I do have a Fidelity account. I haven't logged onto it in years, though. Yeah, it's not going to let me view that. Intel greatest strategic mode on the planet? What does that even mean? Like, did you even think before you typed that, or like, what does that even mean? That doesn't even make any sense. I saw it on X. If you check increase in Larry post equals 50%, I guess. Oh, he posted it again? Fintel? I feel like we've had this conversation before. I don't... Insiders? I don't really know where to look. Oh well. It's all good. Intel earnings call is about to start. So, appreciate y'all. Shout out all my OGs. Thank you guys for always supporting the stream. I don't really talk during the earnings calls, so. And I'll probably end the stream once the earnings call is over, so yeah. If I don't see you guys on Friday or tomorrow, I'll see you guys next week sometime. But we'll run this earnings call before we go. No, it's still just music. It says there are 80 people here as well. Make sure you hit the like button. Make sure you hit the like button. Share the stream. Let us know what you think about Intel in the chat. Is it started? It's got to be starting any second now. All right. Enjoy.
Thank you for standing by and welcome to Intel Corporation's second quarter 2026 earnings conference call. At this time, all participants are in listen-only mode. After the speaker's presentation, there will be a question-and-answer session. To ask a question during this session, you'll need to press star 11 on your telephone. If your question has been answered and you'd like to remove yourself from the queue, simply press star 11 again. As a reminder, today's program is being recorded. And now I'd like to introduce your host for today's program, Mr. John Pitzer, Vice President, Investor Relations. Please go ahead, sir.
Thank you, Jonathan, and good afternoon to everyone joining us today. By now, you should have received a copy of the Q2 earnings release and presentation. Both are available on our investor relations website, intc.com. For those joining us online today, this presentation is also available on our webcast window. I am joined today by our CEO, Lip-Bu Tan, and our CFO, David Zinsner. Lip-Bu will open up with comments on second quarter results and update the progress we're making on strategic priorities. Dave will then discuss our overall financial results, including third quarter guidance, before we transition to answer your questions. Before we begin, please note that today's presentation does contain forward-looking statements based on the environment as we currently see it. As such, they are subject to various risks and uncertainties. It also contains reference to non-GAAP financial measures that we believe provide useful information to our investors. Our earnings release, most recent annual report on Form 10-K, and other filings with the SEC provide more information on specific risk factors that could cause the actual results to differ materially from our expectations. They also provide additional information on our non-GAAP financial measures, including reconciliation where appropriate to our corresponding GAAP financial measures. With that, let me turn it over to Lip-Bu.
Thank you, John, and good afternoon, everyone. Q2 was another quarter of solid execution. Revenue, gross margin, earnings per share were above our guidance. This marks the 7th consecutive quarter of exceeding our financial expectations. Our core message is simple. Strong demand for our products continue to outpace our growing supply. Our design manufacturing execution is improving, and operating discipline we put in place 15 months ago is beginning to show tangible results. Today, we are seeing the strongest revenue growth in more than 15 years. Our cultural transformation continues, and our organization is already operating with greater efficiency, moving faster, making better decisions, and staying closer to the customers. Our recent announcement to deepen our collaboration with Google Cloud will help to accelerate the transformation as we fully embrace an AI-first mentality throughout operations. We also continue to strengthen our leadership team with world-class talent. The surging demand and rapid build-out of compute infrastructure across the world creates a meaningful opportunity for us in our product business as well as our foundry business. Industry is facing one of the most severe supply constraints in its history across leading-edge logic, silicon wafers, memory, and subscripts. These shortages will persist for the foreseeable future. Intel is well positioned to benefit from this strong, sustained demand with 3 strategically important assets: our x86 CPU franchise, our advanced packaging technology, and our vast wafer foundry network. As AI expands from training to inference and increasingly to agentic and multi-agent systems, General purpose server CPU density continues to increase, and our core server CPU franchise is growing faster than ever. Demand signals from our customers are driving increased confidence, and as Dave will discuss in more detail, we are substantially increasing our investments to support this improving demand outlook. Let me talk first about Intel Foundry. My confidence in our foundry process roadmap has grown significantly since joining over a year ago. I am more confident than ever of the strategic significance and unique value proposition of Intel Foundry. During Q2, our factories across Intel 7, Intel 3, and Intel 18A exceeded internal volume targets, driven by improving yields, better cycle times, and increasing wafer starts. 18A output increased meaningfully in the quarter. Yields continue to track ahead of expectations. We are now ramping multiple new products on 18A while supporting growing demand for our lead products, including Panther Lake and Wildcat Lake. I keep raising the bar on the internal targets, and the team continues to meet the challenge. The successful volume ramp of 18A for our internal products provide important validations as our Intel Foundry engages with external customers. We also began risk production of 18AP, providing additional performance and power advantages while maintaining IP and design compatibility with Intel 18A, positioning 18AP as a competitive node for external customers. Looking beyond 18A, I'm encouraged by our progress on Intel 14A. Defect density and transistor performance are all outpacing 18A development. PDK 0.5 is now complete, and PDK 0.9 is on track for October. We continue to build out and validate the IP portfolio for 14A as we position the 14A family for broad-based adoptions across a wide range of customers. I'm pleased to see the increasing momentum on customer engagements for Intel 14A, and I'm increasingly confident that the 14A will be a highly competitive process offering across key vectors of performance, power, density, cost, and schedule. With encouraging external customer progress and increased demand for our internal products, we remain on track for 14A risk production for our internal products in the second half of 2027, and we make the decision in Q2 to fully commit to high volume ramp in 2028. Lastly, on advanced packaging, customer interest for EMIB-T continues to be very high. Technology is compelling, providing capabilities for advanced AI silicon solutions, which are not possible with today's mainstream offerings. We continue to have a growing EMIB-T backlog. Yield and reliability are hitting targets, and we focused on ramping the technology into high volume and high quality to support customer ramps in 2027. Turning to Intel products, we recently renamed our PC business to our Client Computing and Physical AI Group, or CCPG. We did this to recognize the growing opportunity for AI at the edge. I'm excited to have a new, strengthened leadership driving this effort. In our core PC client segment, Intel 18A is now in volume production across multiple commercial and consumer products. Our factory output continues to increase sequentially every month. The successful high-volume ramp of 18A for our internal products provides important validation as Intel Foundry engages with external customers. We still have work to do to establish a strong footprint in the edge and physical AI ecosystem, but see this opportunity as an important future growth driver. Our data center AI group delivered a solid quarter. Demand accelerated across cloud and enterprise as customers increasingly recognize the critical role that CPUs in general, and x86 CPUs in particular, play in the AI infrastructure. Q2 year-over-year server growth was the strongest on record, and Xeon 6 continued to be one of the fastest ramping products in Intel history, reflecting improving execution and strong customer demand. We are also strengthening our outlook with the additional strategic customer wins and long-term agreements in Q2. Our top priority is to ramp capacity and improve factory output as quickly as possible to support customer demand, even as we work to improve our competitive roadmap. We also extended our heterogeneous AI strategy to multi-year collaboration with SambaNova. We are pleased with their growing momentum as we work with them to drive performance and power improvements with disaggregated inference. Lastly, we continue to make steady progress in our newly announced design services business, with revenue growing nearly 3 times year-over-year. We see tremendous opportunities to leverage our strong x86-based general-purpose computing franchise to build more purpose-built computing products for the AI era. Our unique assets in end-to-end design, our IP portfolio combined with access to our leading-edge wafer and packaging capabilities position us well to win this fast-growing space. We are already making great strides in expanding our purpose-built portfolio from networking to compute and eventually accelerators. Our recently announced collaboration with Fortinet for their security processor is a strong step forward in our ASIC strategy in the quarter. As we look ahead, I'm excited to see new Intel take shape. We are operating with greater speed, accountability, and customer focus. While there's still significant work ahead, our priorities are clear. Leverage on our x86 computing franchise to strengthen our product leadership and establish Intel Foundry as a world-class wafer and packaging foundry business. Intel is uniquely positioned to benefit from the overwhelming demand for compute as the entire industry continues a rapid and sustained build-out of compute infrastructure. We are the only company that can design manufacturing, build the entire range of computing solutions from general purpose, traditional CPUs and GPUs to more purpose-built ASICs and CPUs optimized for agentic AI. As we increasingly move from compute dominated by system on chip towards system in package, our advanced packaging and wafer foundry capabilities become increasingly vital assets. Our strategy is clear and pace of execution is accelerating. Opportunities in front of us are substantial. Our strategy is showing earlier results, and I'm confident that Intel is well positioned to help define the next era of computing. I want to thank our employees around the world for their focus, discipline, hard work every day, and also thanks our many customers, partners, and suppliers for their continued trust in Intel. With that, let me turn the call over to Dave to walk through our financial results in more detail.
Thank you, Lip-Bu. We delivered another strong quarter driven by robust demand and disciplined execution that resulted in upside to our supply. Second quarter revenue was $16.1 billion, $1.8 billion above the midpoint of our guide. And collectively, our AI-driven businesses grew greater than 70% year over year, including record data center growth, and contributed approximately 70% of revenue. It's important to note that despite exceeding our expectations for wafer outs in the quarter, strengthening demand continues to outstrip our growing supply. Q2 non-GAAP gross margin was 41.8%, approximately 280 basis points better than guidance. The upside was driven by higher revenue, better yields, and higher ASPs due to mix and pricing actions. We delivered second quarter non-GAAP earnings per share of 42 cents versus our guidance of 20 cents on higher revenue, stronger gross margins, and solid operating leverage. Q2 operating cash flow was $7 billion, and we exited the quarter in a strong liquidity position, including approximately $30 billion in cash and short-term investments. Our Q2 results reflect the ongoing progress in our operational transformation. We're moving faster, holding ourselves more accountable, and staying closer to our customers. Moving to segment results. CCPG revenue was $8.9 billion, up 15% sequentially and better than our expectations. The client TAM continued to hold up well despite broad component constraints and price inflation. Our AI PC revenue grew 26% sequentially and now represents two-thirds of our client revenue mix. In addition, we saw solid performance in our edge deployments, now representing roughly 10% of CCPG revenue. Operating profit for CCPG was $2.3 billion, 26% of revenue, and down approximately $173 million quarter over quarter due to inventory charges taken to optimize our factory network through overall customer demand across client and server. Our client group has now brought 18A to full scale with 400-plus designs for Series 3 across consumer and commercial. During a period of inflationary pressures, CCPG brought Core Series 3 to market at the ideal time, on its A-stepping to provide cost-optimized mainstream compute capabilities. Our integrated ARC graphics solution continues to see strong market adoption, with 40-plus ARC integrated graphics designs across creator, workstation, commercial, and gaming targeted designs. Building on our success in gaming notebooks in Q2, CCPG also introduced Intel Arc G-Series processors, a new family of products designed for next-generation handheld gaming systems, an additional vector for growth. On the commercial side, activations for our market-leading vPro manageability software have surged 1,500% over the last 4 quarters, underpinning that manageability and enhanced security are critical must-haves in the agentic workplace. We expect enterprise adoption of AI to be a long-term tailwind for CCPG, but our AI-driven market prospects don't stop there, as the edge and physical AI opportunity is likely to at least match the client TAM over time. CCPG showcased this growing opportunity with 130 Series 3 design wins for edge AI applications, including brain and control deployments for robotics. DCAI revenue was $6.3 billion, an increase of 24% sequentially and 59% year over year, meaningfully ahead of expectations. The result was driven by strong demand across hyperscale and enterprise. We also continue to see strong momentum in our purpose-built silicon product line, with revenue up roughly 20% sequentially and nearly tripling year over year. Operating profit for DCAI was $2.5 billion, 40% of revenue, and up approximately $1 billion quarter over quarter on higher revenue, improved product margins, and lower operating expenses. Within the quarter, DCAI launched Xeon 6 Plus, codenamed Clearwater Forest, our first server-class product on 18A. The team announced rack-scale and disaggregated inference innovations with partners Samba Nova and Foxconn. In addition, DCAI further enhanced our connectivity offerings by introducing new controller and adapter products supporting data center, enterprise, and telco applications, which scale from 10 to 200 gigabit Ethernet. Turning to Intel Foundry, revenue of $5.8 billion was up 6% sequentially on higher fab volumes driven by strong growth in Intel 18A, with output approximately 25% above target and up more than 50% quarter over quarter. External foundry revenue was $293 million in the quarter. Intel Foundry operating loss in Q2 was $2.1 billion and $348 million better quarter over quarter as higher yields, improved cycle times, and increased factory scale across Intel 4, 3, and 18A drove improved wafer costs. Progress on 18A has been very good. Intel Foundry has driven down the cost of our primary Panther Lake SKU by roughly 50% year to date and is on track for an additional 20% this year, with further meaningful reductions planned in 2027. Within the quarter, in addition to delivering output above our expectation, Intel Foundry also entered risk production for 18AP and met critical milestones towards delivering the 0.9 PDK for Intel 14A in October. We stepped up investments in Q2 for Intel 14A to prepare for risk production in 2027 and committed high volume ramps in 2028. Now turning to guidance. Looking ahead, customers continue to signal a strong and sustainable spending environment driven by the unprecedented demand for AI compute. Industry-wide supply constraints across wafers, memory, and substrates remain the dominant challenge our customers are facing to support the AI infrastructure build-out. Our wafer output across our major nodes exceeded expectations from 90 days ago, and Q3 quarter-to-date 18A yields are trending ahead of targets set in March. Even with this strong execution and the positive trends as we enter the quarter, supply remains very tight, and the near-term linearity of our supply growth is more skewed towards the end of Q3 and into Q4, especially for servers. From an end market perspective, we expect PC consumption to be sub-seasonal in the second half of the year and down low double digits % for all of 2026, impacted by rising memory prices and constraints. This is in line with industry peers and third-party estimates. At the same time, improving supply, a strengthening product portfolio, and encouraging tailwinds for edge deployments provide us with some positive offsets. Our outlook for server CPU demand has improved again since our last earnings report, and we're forecasting strong double-digit unit growth for the industry this year and next, with momentum extending into 2028. Taken together, we're guiding Q3 revenue to a range of $15.8 to $16.8 billion. At the midpoint of $16.3 billion, we forecast gross margin of 42%, a tax rate of 11%, and EPS of 38 cents, all on a non-GAAP basis. We continue to tightly manage non-GAAP operating expenses to roughly $16.5 billion for the year, and we expect non-controlling interest, or NCI, to net to approximately $250 million in each of Q3 and Q4 of this year, and be approximately $1.1 billion for 27 and 28 on a GAAP basis. Turning to CapEx. Due to strong customer demand signals, we're raising our outlook for 2026 and now expect our CapEx to be more than $20 billion, which is up significantly versus our expectations entering the year. We're also aggressively locking in tool purchase orders from our vendors, accelerating our clean room build-outs, and actively securing supply of substrates and memory. As a result, we're forecasting 2027 capital expenditures to be significantly above the 2026 levels, with the vast majority spent across our U.S. network. In fact, as we look back from 2021 through 2026, our total capital spending in tools and space in the U.S. is approaching $100 billion, significantly higher than any other semiconductor company over that timeframe. We remain committed to tightly matching our expenditures with customer demand and remain financially disciplined as we capture the growth ahead. In closing, Q2 was another strong quarter financially and operationally. The client TAM is unfolding as expected, and server CPU demand continues to far outpace available supply. Emerging markets in physical AI, purpose-built silicon, advanced packaging, and external wafers are each multi-billion-dollar annual revenue opportunities for us in the not-too-distant future. I'm confident in our ability to leverage our broad IP portfolio to solve our customers' most pressing needs and drive long-term value for our shareholders. With that, I'll turn it over to John to start the Q&A.
Thank you, Dave. As a reminder, please ask one question and a brief follow-up in order to allow us to accommodate as many callers as possible. With that, Jonathan, can we take the first question?
Certainly. And our first question for today comes from the line of Ben Reitzes from Melius Research. Your question, please.
Hey, guys. Thanks a lot. In quarter, I wanted to ask about the CapEx increase by about $3 billion this year and significantly next. What does that imply for your foundry customers? Does it mean that you've received some hard orders for 14A or 18AP? And then what does it mean for packaging, if you could delineate between the two? Thanks.
Okay, let me just write that down. Okay, so let me take the second one first. The CapEx is fairly broad-based. It's going to include advanced packaging. As Lip-Bu talked about, we're pretty excited about our prospects on EMIB-T, and so we will be investing in that. That said, the cost of a fab for the front end is much more expensive than a packaging facility, so it will be skewed towards the front end. But nevertheless, both of them will be important to us. As it relates to customers, I would just say that this increased investment is a signal of our confidence in customers across all of our business units. We feel very confident, particularly in places where we've gotten long-term agreements, that we now have the signal to be able to kind of forecast out what the outlook looks like for the next few years in terms of demand, and we're putting forth a capacity in anticipation of that across all of our businesses. That said, as I said in the prepared remarks, we remain very disciplined around spending, and Lip-Bu, I think, has beaten that into us, that we will put CapEx in place when we feel very confident we can generate a very good return on it. These fabs that we're building, obviously, initially, from a cash flow perspective, are net cash out. That's why you see the CapEx going up next year. But over time, they generate significant return, and particularly now as we migrate towards a model where we keep these processes on longer, the returns are quite significant. In fact, we're seeing that in Intel 10/7 today, given the length of time we've had that process in place.
Ben, do you have a quick follow-up?
Yeah, hi. Thanks. Your competitor today talked about raising the CPU TAM by 2030 to $220 billion, with a CAGR, I believe, of 45% or something really great. Can you comment on that? Are you seeing the same thing? And what do you think of either that number or the growth rate and your ability to fulfill it? Thanks.
Yeah, without putting a number out there, we obviously recognize that this is a strong market. It's going to grow significantly. Lip-Bu's talked in the past about the ratio of CPU to GPU going up, and we now believe we're almost in parity at this point, and could eventually even skew more to CPUs on a unit basis. So I think this market's great. We think we have a strong position in the market, an opportunity to capture a significant share of that market. It's going to be a big number. Whether anybody can actually predict exactly the number and pinpoint the number, I'm not sure they can. But from all the inputs we're getting from our customers in terms of the level of spend and also the long-term agreements we put in place and the visibility we've gotten, we feel like the growth is going to be significant.
Thanks, Ben. Jonathan, can we have the next question, please?
Certainly, and our next question comes from the line of Joe Moore from Morgan Stanley.
Great, thank you. I guess following up on the CPU comment, what do you think happens to your market share in the server space? You have fabs now, which would seem to be an advantage. Do you think that helped you gain share this year? And then as you think about the next 5 years, your competition versus both AMD and also versus ARM, just how are you guys thinking about the prospects for regaining lost share?
Yeah, maybe I can start first and then Dave can chip in. So I think clearly it's a good question. I think I mentioned earlier the demand is quite strong. And then, in terms of agentic AI and inference, the ratio of parity CPU and GPU. And so I think the demand is strong. And I think the challenge right now is more how to grow our supply and to meet the customer requirement. But saying that, clearly, on the server side, data center side, I think we have a strong roadmap. We have Clearwater Forest, Diamond Rapids, and also Coral Rapids with the SMT involved. So I think we continue working on improving the competitiveness against our competitor. And I think clearly it's very important to drive the improvement in the single thread and also multi-threading. And multi-threading will be coming in the Coral Rapids. And so I think all the above, we have been really driving that. I think regarding your second question in terms of the ARM, clearly ARM is a great partner for us. And, we have a strong relationship there. And, Renee and Masa are a good friend of mine. And we really focus on not just the ARM-based CPU and also on the ASIC foundry side. They can be a great partner and customer, and especially in the IP front. And so in all, I think we compete quite well. We have a strong product roadmap. Some area we are still behind, but we are catching up very fast. And we try to leapfrog some of the CPU architecture. And we are putting major effort into it. And then time will tell.
Joe, do you have a quick follow-up question?
Yeah, thank you. Just separately, on the CapEx, is there still a sort of net versus gross aspect to that? Or are you kind of more clear on that? And then, how do you think about how you're apportioning that between internal and foundry? Is there a point where you'll be able to delineate that for us? How much is for external customers?
Right. Yeah, there is a gross to net. At this point now, most of the gross to net is AMIC or the investment tax credit. It's running in the kind of low single digit billions right now. Although, as we progress, I think, we'll start to see that become bigger in terms of chunkiness. At the end of the day, it's a timing thing, but at the end of the day, we're getting 35 cents on the dollar back from the investment tax credit on everything we invest in the U.S. And as I said in my prepared remarks, the lion's share of our capital spend is devoted to the U.S. So it should be pretty significant. But like I said, there'll be a delay factor because we've got to build the factory, and then we can start claiming tax credits on the factory, and then we have to get it. Once we're putting the tools in, it's got to be all the way to production ready before we can claim any sort of credits on the tools. And so and then of course you have to file it with the IRS. So there's a bit of a delay from the time you spend to the time you get it back. But yes, there is a gross to net. I think from an investment perspective, I'm not sure we look at it exactly that way, and we really look at how many wafer starts we want in a given node, and we invest to the wafer starts we're looking for on the front end. And we have a point of view based on all the demand drivers within the business of what that number looks like, and that's what we're putting in the purchase recs with our suppliers to be able to meet those expectations. And of course, we remain nimble, as we get more information and we progress. On the packaging side, we are already getting significant backlog, so we already know we need to ramp that up, and that's partly our own internal manufacturing facilities, but we also need to procure substrates from vendors, and there's some requirements there in terms of putting money up in advance of getting the substrates. So we're making those investments probably more quickly right now to get ourselves ready for that.
Thank you, Joe. Jonathan, can we have the next question, please?
Certainly. Our next question comes from the line of Stacy Raskin from Bernstein Research. Your question.
Hi, guys. Thanks for taking my questions. I wanted to ask about client. I think everybody kind of had an inkling that data center was going to be pretty strong. I was surprised at the client strength, and I know you talked about demand holding up pretty well. I know you're ramping Panther on some of the new products, but I guess, was it all pricing that drove that revenue strength, or was there something else going on? And I guess if you could maybe comment on what your expectations are for client in the second half relative to an end market that sounds like it's going to be worse than typical as we move into Q3 and Q4.
Yeah, I mean, client obviously exceeded expectations. I would say it was largely ASP, of which some of that was mix related, some of that was our own like-for-like changes in ASPs where we thought we had seen some inflation on our cost and needed to pass that on to the end customer. When you look at it year over year, it's definitely down. That market, it had a really good 2025 because of the Windows refresh, so it was coming off a little bit as it relates to that. And then of course memory in terms of cost and even availability, I think has caused that market to be a little softer. But we kind of skewed the mix to the higher end, and that helped a lot in terms of ASPs and helped it perform. I'd say as we look into next quarter, probably on a revenue basis, it's going to be kind of flattish for us. Overall, CCPG is likely to be up a bit, but I think it will be driven by good growth on the edge, and client will be flattish. Underlying that, the market is softer. I mean, I think that market is struggling with the memory dynamics in the marketplace. So, we think it'll be, down in the quarter, but because they have been living relatively tight with inventory on CPUs, we likely would see some build in CPUs for Q3. And then Q4, I think it will be, we'll start to experience that in our own business and be soft. The good news for us is we need it because we need the CPUs for the data center side. We can't fulfill the demand as Lip-Bu was mentioning. So, we'll pivot as much of the production as possible over to CPUs and data centers to try to do our best to catch up to what is a pretty significant difference between our ability to supply and the demand out there.
Stacy, do you have a quick follow-up?
I do, thank you. You talked about the inventory charges in client. I guess what were those and how big were they? And if I look at that, you're kind of guiding gross margins, sort of flattish into next quarter. If I take out the charges, does that imply that the gross margin guide is actually down sequentially?
Okay, so let me unpack it. So just, sorry, Stacy, you're talking about inventory on our balance sheet for client, or you're talking about?
No. Yeah, you talked about inventory charges. The margins in the client fell.
Yeah.
Even on
sorry.
revenue growing. Yeah.
Sorry, yeah, didn't follow that. Yeah, okay. Yeah, we had some products where they weren't fully completed from a match set perspective, and it just made better economic sense for us to try to pivot more to some of our other products and not complete them given the challenges around match sets. So given it was somewhat stranded inventory, we wrote that down. And you're right, we are guiding flat quarter to quarter. So obviously we get a lift from not expecting to have that write down in the second quarter. The offset of that is, even though like Panther Lake and Granite are doing better in terms of their cost quarter to quarter, they're also becoming a really significant part of the mix, and they're still below the corporate average because they're still relatively early in their life cycle. So that's weighing the margins down a little bit on the offset to the lift we get in terms of the reserves and why we think things will be flat. But eventually, both of those things turn into a tailwind. As yields improve on 18A further, we do expect margins to improve on Panther Lake, and they will be above the corporate average, and that will help start lifting the margins there. Obviously we're keenly focused on improving gross margins over time. I would say, while there's a lot of puts and takes in gross margins, our number one goal this year, which everyone in finance here can attest to because I was a dog with a bone on this, was to get gross margins comfortably into the 40s in every quarter. And I think the team did a really good job getting there, at least for the first 2 quarters, and our outlook for Q3 would suggest the same. So our goal is to be solidly in that, and then we can kind of pivot from there and look to improve the gross margins off of that base.
Thanks, Stacy. Jonathan, can we have the next question, please?
Certainly. Our next question comes from the line of Timothy Arcuri from UBS. Your question, please.
Thanks a lot. Dave, you made a comment that there's a lot of capacity coming online toward the end of this quarter. So I guess that implies a pretty big step up in revenue for Q4. If I assume that you're still kind of undershipping the market, I think you implied you're undershipping at least last quarter by like more than $1 billion. So if in September you're undershipping by a similar amount, then it would seem to suggest that Q4 is going to be up pretty big. Is that the right way to think about it? Can you just provide some puts and takes around that?
Yeah, I mean, obviously, we only guide 1 quarter out, which would be my standard response. That said, yes, I mean, of course, if we are able to start to see inventory improve or supply improve towards the end of the third quarter and into the fourth quarter, we would expect a lift from that. I would point out that while things will improve, we will not catch up. We will be behind in the fourth quarter. And I think the team internally, it's tight with wafers internally. I wouldn't dismiss that, but they have done a very good job, trying to meet demand and upside Lip-Bu and I a bit in terms of what they've been able to accomplish. But our supply is a combination of the wafers that we manufacture internally, plus advanced packaging like substrates. We've got T-glass, we have memory. And so procuring all of that is also, a bit of a choke point for us. And in fact, I'd say in some of those areas are probably our most challenged parts of our supply chain. So, we're working to improve that. While front-end wafers can be a little bit more linear in terms of our improvement, some of those are a bit chunkier. And so, we start to see some of the logjam break in towards the end of the third quarter, which is why we're more flattish this quarter, but see upside in the fourth quarter.
Tim, do you have a follow-up question?
I do, yeah. Dave, so the year-over-year drop through on gross margin was pretty good in March and June. Based on the guidance, it kind of falls back to the low 50s, which is sort of within your 40 to 60% that you've talked about for a drop through. Is that still the right way to think about it? I mean, I'm just trying to see if you can give us some puts and takes into next year. Thanks.
Yeah, I mean, longer term, I think, we'd expect that to be somewhat the fall through, somewhere in the 40 to 60 range. I mean, every quarter has got unique dynamics to them that that affect whether you're at the low end of that range or at the high end of the range or at the midpoint. But I think it's a good, relatively good rule of thumb for us.
Thank you, Tim. Jonathan, can we have the next question?
Certainly. Our next question comes from the line of Vivek Arya from Bank of America Securities. Your question, please.
Thanks for taking my question. Lip-Bu, you mentioned increased confidence in engaging with external foundry customers, and I'm curious, when will that confidence be backed by actual customer announcements? And then related to that, I think you are planning to raise CapEx. How much should we be expecting a CapEx increase for next year, and how much of that CapEx increase is for external customers versus just expanding capacity for your internal needs?
Yeah, Vivek, thank you so much for the question. I think I will address the confidence I have, and then I think Dave will talk about the CapEx increase. So first of all, I think for the 18A, I think we have this 18AP is in the risk production now, and will be ready before the end of this year. Clearly, we see a 5% enhanced performance, and then 18A, and then the 18A yield and the production. I think we're starting to see strong, and then in terms of Panther Lake, we can see that in the ramping in the volume. But let's focus on the 14A. 14A, our PDK 0.5 complete, and 0.9 for 14A is on track for October. And that's a very important milestone. And I see the yield for 256 SRAM and the defect density, the performance ahead of the schedule that I put a very tough schedule for my team. They all met and I achieved that. And then risk production for 14A, will be second half of 2027, and then the commit volume production in 2028. So I think all in all, the engagement, the customer, the feedback have been very positive, tremendous demand for our own products, and also external foundry customer engagement that give me the confidence. The moment they're starting to see the 0.9 PDK, the yield, they're starting to get excited about what kind of product they want to run that and how much capacity we can provide them. So those are very positive signs that they are really serious about going forward. And that's why, as I mentioned earlier, I don't put CapEx unless I see the yield performance, the IP is ready to serve the customer, and also customer engagement, the level of engagement I see. Then Dave and I were starting to put CapEx to work. So Dave?
Yeah, maybe it might make sense to start with 26 and just unpack CapEx just so it's clear. We invested a lot in space over the last few years, so we are in a very good place in terms of space. There's still obviously a little investment to facilitate some of the factories, but it's relatively modest. So we're really where all of the CapEx or most of the CapEx dollars are going to at this point is tooling. We'll increase tooling in 26 by 40% relative to 25. So we're investing a significant amount in tooling, and it's where you might expect. It's Intel 3, it's 18E, it'll be 18 AP. I purposely didn't mention a number for 27 because we're still working out the exact details of what number we'll land at, and typically in this industry you release that number really at the very beginning of the year. But I did want to give investors at least a line of sight to expect that the number will be up, but you'll just have to bear with me. I think we need another quarter or two to really solidify the number. And then, where it's going to, as I said, it's going to both. We're investing for all of our business units, both internally and externally, and we take a holistic view of what our wafer demand will look like from all of those customers, and we build capacity that is aligned with that view.
Vivek, do you have a quick follow-up?
Yes, thank you, John. So the follow-up question, Dave, is on the balance sheet. So as you are planning these investments for the back half of the year and into next year, how are you thinking about the balance sheet? Do you think that the success you are seeing in your product business on the CPU side, do you think that is enough to kind of fund a lot of these investments, or will something else be required? Thank you.
Yeah, it's a good question, Vivek. I mean, we obviously feel like we're in a really good place from a balance sheet perspective. We have over $30 billion of cash. We have a $10 billion revolver, so we've got $40 billion of liquidity. That enabled us to de-lever, which we felt was important to keep us solidly in investment-grade territory, which we wanted to do. Obviously, the fact that revenue and profitability and EBITDA are all expanding helps a lot in terms of the cash flow that throws off to the business. And additionally, we have, I don't know, roughly call it $10 billion of what I call non-core assets, that can still be monetized on the balance sheet. And although we're not anxious in any stretch to do anything there, that's available to us in the event that we need it. And we have seen, by the way, our customers willing to invest with us. And we've had prepays from customers that has enabled us to unlock capacity that's helped us. That said, if we're super successful, which we're driving to, we may need to tap the capital markets to drive some more investment. And we'll stay tuned. If we need to do that, we'll certainly keep the shareholders apprised.
Thank you, Vivek. Jonathan, can we have the next question, please?
Certainly. Our next question comes from the line of C.J. Muse from Cantor Fitzgerald. Your question, please.
Yeah, good afternoon. Thanks for taking the question. I guess maybe a follow-up to a prior question. And Dave, I know you don't want to guide out more than a quarter, but curious how we should be thinking about shape of the server kind of revenue recovery here as you bring on capacity, both this year and next. And as part of that, how should we be thinking both from a unit and an ASP perspective as we go through the second half of 2026 and into 2027?
Yeah, I mean, I think, obviously, we're driving as well. Maybe step back and say all of our server wafers are procured internally for the most part. Some of the ASIC stuff isn't, but for the most part, it's all procured. And we are investing, heavily in expanding the wafer starts in our key nodes. In particular, the most important node for us on servers is Intel 3, because that's how that's our node to produce Granite Rapids, and we're seeing tremendous demand there. In fact, as strong as demand is across all of our products within data center, Granite Rapids is extremely tight because the reception there has been fantastic. So we are building capacity there over time. It will be a little bit chunky, but I think in general we have a pretty good ramp of Intel 3 planned for the rest of this year and next year. The challenge, as I said, is it's not just the front end that we have to expand capacity, and we also have to expand capacity on the back end. That then gets into areas that are tight, like substrates, and so we're working to expand that. I think they did a good job in the first half of the year getting more capacity, but more work to be done to drive that to the levels that we would need. I think when we're talking about the market in general, we're talking about it from a units perspective. That's we think the growth rate on a units basis looks quite good. Obviously, the units are getting more weighted average core counts, and we generally, this market is priced on an ASP per core basis. So as you get more cores, you easily get more ASP uplift. And so that will definitely be a component of the revenue growth in this business, and gives us some real confidence that this is going to be well north of a double-digit CAGR for us in terms of growth rate over the next few years.
CJ, do you have a follow-up question?
I do, John. Thanks. I guess going back to CapEx, and I know you don't want to guide today for next year, but I'm curious if there's a framework in your mind as you balance meeting customer needs as well as your desired free cash flow goals. Is there anything kind of we should interpret around that to help us as we build our model to think what the appropriate CapEx is within that, or no, if you've got the signed kind of contracts with customers, you're just going to build it?
I mean, no, we're going to be more thoughtful around it. I would say, just if you look at the straight business and look at what we think we can do from a cash flow from operations perspective, just the base business, look at what CapEx, even if we step up CapEx investment, and the offsets that we get from AMIC, our cash flow actually looks pretty good. But we are likely to have to make investments in the back end as well, particularly with third parties. That could be a drag to gross margin or to cash flow next year, and make getting it to a positive number a little bit more challenged. But that said, all of the investment we're making has tremendous ROI. So I think as long as we feel confident in the growth rate, confident in what we think we can do in terms of pricing and cost structure for those products, and we know that when we make investments in these nodes, the lifetime of these nodes is fairly significant and almost always drives a good ROIC, we'll make the investment. We're just going to be very careful around making bets ahead of customer commitments. I think that's the most significant change with Lip-Bu is until we really know that we've got the customers, we don't want to put significant amount of capital. And you can read that now inversely, given our confidence around next year, that we must have pretty significant confidence in our customers, or we wouldn't be putting the POs in place today.
CJ, thank you very much. Jonathan, we've got time for one last question.
Certainly. Then our final question for today comes from the line of Aaron Rakers from Wells Fargo. Your question, please.
Yeah, thanks for taking the question. I guess the first question's on the ASIC business. I guess
based on what was disclosed last quarter, it's about a $1.2 billion run rate business now, growing well for the company. How do we think about the diversity of that business and just, you've announced Fortinet. I'm just curious of how you're thinking about the growth profile of that business and maybe, also with that, the margin profile of ASICs as they expand.
Yeah, let me start first. I think, first of all, this is a massive opportunity. I think potentially it's over $100 billion TAM market. And we have unique opportunity to offer beside our advanced design capability using our CPU, XPU, and also we have a strong IP portfolio. And we also have the advanced packaging that are very unique in terms of radical integration and also the layer that needed, so they can really drive the leadership. And a lot of new technology, AI, really need this packaging technology, plus our advanced silicon process technology that combined give a lot of opportunity for a lot of purpose-built silicon that a lot of company needed. And so I think one example is recently we announced with the security ASIC business with the Fortinet, and we're clearly that we really drive the next generation security processor with a higher performance. And of course, we all know about the Intel IPU they're providing to some of the hyperscale, and that is tremendous opportunity. So I think I mentioned it's a 3x increasing in terms of year-to-year growth. So I think it's a great opportunity for that. And then the other part, Dave, you want to chip in?
What was the question?
Growth rates.
Growth rates of
ASICs.
Of ASICs. I mean, I would say that today we're probably running at about a $2 billion run rate, or at least approaching a $2 billion run rate for that business. We think in the not too distant future we'll be at a $4 billion run rate for that business. So I think that probably gives you a good sense. And we think that Lip-Bu mentioned the $100 billion TAM. We think we deserve a good chunk of that, given our IP portfolio and what we bring to bear. So stay tuned.
Aaron, do you have a quick follow-up question?
Yeah, I do. Thanks, John. There's a lot of things going on in memory and just memory hierarchy and architecture shifts and stuff. And there's been some recent news about, Intel's own development work. I think there's a technology called Z-angle memory. There's a cross-batch memory. So I'm curious, as you strategically look at the role that memory plays in these architectures and scaling compute, does Intel serve a bigger role in that? Is there internal developments and even opportunities in memory over time?
Yeah, good question. I think a couple of things. First of all, the memory become the big supply constraint challenge. And we're collaborating with the 3 big memory vendors. That's very important to serve our customer as a number one priority. The next thing, as you recall, Intel have a rich history in the memory. And recently we hired Seok-Hee Lee to join us. He used to be the CEO of SK Hynix. And clearly memory, it become the bottleneck, a lot of AI infrastructure and pain point for customer. And we also looking at how are the area that we can integrate compute and the memory, and also how the stacking, and then how can we use the memory more utilization more efficiently. So I think there's a lot of area we are working on. Stay tuned, and we will work on that. I will keep you guys posted. With that, I think my closing remark. With that, I want to thank everyone for joining us today. We make good progress this quarter on our journey to transform Intel, the new Intel, but we still have a lot to do ahead of us, and looking forward to see many of you throughout the quarter and provide additional update in October.
Thank you, ladies and gentlemen, for your participation in today's conference. This does conclude the program. You may now disconnect. Good day.
Thank you. That was pretty good. Appreciate everyone stopping in. Hope you guys have a good rest of your day, week, whatever. Have a good weekend. God bless. Later.